Hello my dear friends, hope you all are doing really well. You know why I am so happy today? Because today again we are going to cover a very important topic which is exclusively covered in your ACCA AAA syllabus only. However, it has a lot of relation with your FA in your knowledge level, with your FR in your skill level and with your SBR subject in the professional level. But from the audit point of view, you are going to cover this chapter for the first time. Can you guess which chapter it is? I think you might have already read the title of the lecture, so you already know it, but just in case if you have missed, it is group audit. You know why this chapter is very interesting? Because generally we only talk about how to apply the audit procedures, correct? How to verify the data presented by the management, what are the auditor's responsibilities, what are the management responsibilities, all of these things, right? But this is one such chapter which only and only talks about the auditor, right? It does not talk much about the management part. It talks about the relationship of one auditor with another auditor. So in this chapter, we are going to discuss about the group audit. We are also going to discuss about the joint audits. We are also going to discuss about the transnational audits. And in all of these topics, we are going to cover the relationship between one auditor with another auditor and between two auditors. So that becomes really important and really interesting for all of us. Okay. So I would suggest that you should complete this chapter with very diligence. You should solve all the available questions of this chapter so that you score very good marks in your examination. And this topic is a topic which is definitely asked in the examination. It could be for 4 marks, it could be for 10 marks, but it is definitely asked in the examination. Okay, so please prepare it from that level of preparation only. Okay, now let's go for it. The number of the chapter is chapter number 11 and it talks about group audits. Okay, before we move further, I would like to tell you something. Okay, I would like to tell you exactly how this overall functioning happens. Okay, and then we will be going for the technical text. But before we go for the technical text, we should have some rough idea about it, right? Like we always do. So let's try to understand it. Okay. And I hope you are liking the lectures. If you are liking the lectures, please go to my YouTube channel, which is ACCA with Supreet Agrawal, and subscribe to that channel for the continuous and regular revision sessions, question solving sessions, and a lot of other reference materials. Now, if you want the notes and if you have any of the doubts, queries, or anything, please feel free to subscribe to my Telegram channel, which is ACCA with Supreet Agrawal again. And if you are looking for some relatable content regarding audit, regarding various other things, then you can subscribe or you can follow my Instagram account, which is ACCA with Supreet Agrawal again. Okay, so I hope all of these things are made available to you earlier. Now let's discuss about what is this group audit. Okay, so let's talk about a scenario where there's a company. Okay, there's a company, say company A. Okay, there's a company A Limited. There's a company A Limited. Okay, now this company controls B Limited. This company controls B Limited, that is it has more than say 51%. There are other conditions also, but say more than 51% is owned by A Limited. Okay, so this becomes our holding company. This becomes our subsidiary company. Okay, now so let me specifically write it over here. So it holds 55%. Okay, 55%. Okay, it is holding, this one is subsidiary. Okay, now this company will have one auditor. Okay, so this would be called as group auditor. Okay, group auditor, that is auditor of the parent. Okay, this one will also have an auditor, that would be called as component auditor. Okay, that is auditor of subsidiaries, associates or JVs. Okay, that is important. Now let's try to understand from one more point of view. This would be called as what? This would be called as holding company or group company or parent company. Okay, this would be called as component. This would be called as component. Okay, the management of this particular company would be called as component management, and the management of this company would be called as group management. I hope this is clear. I hope this is clear. I hope this is clear. Now, can these two auditors be same? can these two auditor, can they be same? 1 2, can 1 and 2 be same? Yes. Can 1 and 2 be different? Can 1 and 2 be different? Again, yes. Okay, so they can be same, they can be different as well. Now if they are same, then the story is very much synchronized, right? That whatever would be told by the auditor of the parent company, that would be followed by the auditor of the subsidiary company in the same format, in the same manner, because they are essentially the same firm. But if we talk about that they are different companies, is it allowed? First of all, yes, it is allowed. Now it becomes a little challenging, because now the group auditor will have to issue the instructions to the auditor of the component company, right? Then component company will have to follow those instructions, submit a report to the group, and then group auditor will have to evaluate that whether the work done by the auditor of the component is sufficient or not, and what is the impact of the opinion that is generated at the component level on the group level via materiality, right? So let's have a quick summary of whatever we know about. So the process, okay, process. Component auditor will submit report, assuming component auditor is competent, will submit report to group auditor. Group auditor, I'm just writing the rough process, okay, evaluates the competence and objectivity of the component auditor, right? And, or let me just write it over here, I'll create a new point, of component auditor, then group auditor. Group auditor does what? Evaluates impact of opinion of component on the group audit, okay, and then the relevant changes are done. Okay, this is the basic process. This is the basic process. Now let's discuss about what is it inside the chapter. Okay, so the chapter name is group audits. Here we will be covering ISA 600 revised, which is special considerations, audits of group financial statements, including the work of component auditors. So where will we discuss other standards of the 600 series, which is 610 and 620. So that would be discussed in a separate chapter, which is named as using the work of others. Okay, so that mind map should be very, very clear to you. Okay, now at the end of the classes, what I'll do is I'll create a summary of all the chapters. I'll link it with the relevant lectures. Also, I'll give you a summary of the standards, and I'll also tell you where we have covered this particular standard, so that you can be sure that we have not missed out on anything. Okay, now it does not apply to this particular standard, although the chapter includes these topics, but this standard does not apply to relationship with joint auditors. That is covered in ISA 299. Have we covered it? Yes, we have covered it in this chapter. Relationship with predecessor auditor, so we discussed it under communication and all, right? Then when group auditor concludes that FS of a component are immaterial, sometimes what might happen is, say the company, say example, parent's turnover is say 5,000 crores, components turnover is say 50 lakhs. Now do you think, can this happen? First of all, yes, it could be a new company, but do you think now, even if we have any issues in the component other than fraud, of course, then will it have any impacts on the group financial statement? Generally not, right? It is generally immaterial. So that time also this does not apply. Okay, now the group auditor should determine how the work of component auditors will affect the audit, both in the form of procedures and in the form of opinion. Let me write it, both in the form of objectivity and procedures, and the conclusion. Okay, so that is very, very important, that Group auditor should evaluate that how the objectivity of the component auditor, how the work of the component auditor, how the procedures applied by the component auditor, and how the conclusion drawn by the and the opinion issued by the component auditor is going to affect the financial statements of the group. Now there are certain terminologies that should be very understood by you, that should be understood by you in very advanced level, in very good level. Okay, one is group, another one is component. So we have already discussed about it, right? So all the components together, that is in this case B, C, D, E, all the components together whose financial information is included in the group financial statement would together be called as group. Okay, now what is component? So an entity, business unit, function, or a business activity, that is, it could be a separate company, it could be one part of the company also. Sometimes what might happen is that the overall company is not material, but one part is very material, or the overall company is material but it has 100 departments, out of which only one part is considered as material. Can that happen? Yes, that could happen. So an entity, business unit, function, or business activity determined by the group auditor for the purpose of planning and performing audit procedures in a group audit. That is, can it be a separate company? Yes. Say B Limited is classified as a component. Can one department, one function, one business unit of B Limited be classified? Yes. So let me write it over here so that we are very sure. Can one unit of B Limited be classified as a component? So the answer is yes. I hope this is clear. Now, when joint auditor conduct an audit, when joint auditor, okay, not the group auditor, can conduct an audit, the joint engagement partners and their engagement team collectively constitute the engagement partner and engagement team. Now this is an extra point, that when there are more than one auditor, that is, there is joint auditor, then collectively it would be called as engagement team or the engagement partner. Okay, now group performance materiality. What is performance materiality? Materiality set at below the overall materiality, right? Materiality set at the amount below the overall materiality to prevent the overall financial statements from having material misstatements about the material amount set by the auditor as a whole, right? Now this is very important. This concept is similarly applied to the group as it is applied to a standalone financial statement, standalone audit. Okay. Now there are certain other terms which I have not mentioned over here, but they are very similarly applied, like aggregation risk. What is aggregation risk? Risk that the collective amount of all material misstatements or all misstatements would move above the materiality set for the financial statement as a whole. That is similarly applied over here, but I have not written it because we have already discussed it under the materiality chapter. Now my friends, I would really like to request you that for this particular chapter I am talking about, for this particular chapter you should definitely go and read the ACCA study up. See, you have to anyways read it for other chapters, but this is one of those chapters where you should definitely read it. Why? Because there's a lot of content that is given over there and that is valid also. However, that might not be very much valid for your examination directly, but that is very important to frame your answer. Okay, so for this chapter, I would really request you that you please go and read the ACCA study up also, and please feel free to reach out to me if you feel any concern, if you face any issues. Okay, now let's discuss about it. So group materiality, amount set by the auditor below the materiality to manage aggregation risk for the group financial statement to an appropriately low level. What is aggregation risk? Risk that the overall financial overall misstatements including material as well as non-material financial statements would move above the materiality set for the financial statements as a whole. This we have already discussed in materiality chapter. Now let's talk about ISS 600 in technical terms. This was just terminologies and all. Now let's discuss about it in technical terms. Okay, so leadership responsibility. Now what I have done is I have figured out certain important pointers from this standard and I have mentioned it over here. That will help you to frame your answer, that will help you to frame your understanding as well. Okay, but there are other contents as well, the simple lines that are there, that might help you to frame your answers in a little better manner. Okay, so please go ahead and read it. Now leadership responsibility for quality rests with group engagement partner. Do we know this? Yes. See, even if component has made certain errors in the audit of components, who would be ultimately responsible? The group auditor. So this could be this could be written in such a way that is group auditor continues to be responsible. Group auditor continues to be responsible for the audit of group as a whole. That is, even if there is material misstatement identified in the component and component auditor might not have verified it or might not have highlighted it, still group auditor might also be blamed for that, because group auditor has the power to review the work of the component auditor as well. I hope this is clear. I hope this is clear. Okay. Now, second point. Group engagement partner determines whether or not the group auditor is able to obtain sufficient and appropriate audit evidence to form an opinion on group FS. Let's read it. Group engagement partner, we are talking about the partner, determines whether or not the group auditor, that is group auditor includes everybody, the engagement team, the other auditors, if it is a joint audit, everything, is able to obtain sufficient and appropriate audit evidences to form an opinion on group FS. That is group engagement partner is responsible, just like any other audit also where the engagement partner is responsible. Correct. Now, planning. See, people are really scared of group audits because they do not understand the relationship between a general audit and a group audit. It does not differ much. What happens is there would be more parties, there would be more people, there would be more kind of auditors, there would be more concepts which are related to more number of auditors. That's it. Nothing to be afraid of. Okay. This chapter is going to help you score good marks in your examination. So please understand it very, very carefully. Okay. Now, planning. Planning which components require audit work to be performed as part of the group audit requires consideration of relevant factors. Let's read it again. Planning which components require audit work to be performed. Which components require audit work to be performed. That is factors to be considered. Factors to be considered while determining which components would be covered. Which components would be covered. Okay, this is important. So newly formed or acquired components. Okay, that is, if any component is newly formed or acquired, then we have to do what? Then we have to include it under the group audit. Then components with significant change, then also we should include it. Components with significant change, say change in management, or change in business, anything could happen. High risk events or transactions, that is a component which has entered into high risk transaction. Example, multiple forex transactions or with related parties, right? That could form part of this kind of evaluation. I hope this is clear. Now, group auditor has the responsibility to obtain an understanding of the group, its environment and the AFRF and the system of internal controls, and to respond to such risks. That is, at the group level, component is not responsible. That is at the group level, component auditors are not responsible to obtain understanding of the business or internal controls or accounting systems. That is the responsibility of whom? That is the responsibility of the group auditor, as these are the responsibilities of the group auditor. I hope this is clear. You know why I find this chapter very, very interesting, because it is 100% relatable to what you have already understood, what you have already studied, but at the same time it has a lot of new concepts, it has a lot of new vision of looking at it. That is why this chapter is very, very interesting, and ACCA body also finds this chapter very, very interesting, and they always ask it in the examination. So please prepare well. Okay. Now let's talk about the next point, which is communication. Now communication could be with the group management, communication of group auditor with the group management, or communication by the group auditor to those charged with governance. Both could be there. Okay. We have already covered the standards where we talked about what is the level of communication that is required between the auditor and the management, not the group, but the auditor and the management, and the auditor and the those charged with governance. Similar conversation is going to happen here. Similar level of communication is going to happen here. Okay. So you do not need to worry. Now, at the acceptance, communication with whom? The management. Okay. So at the acceptance or continuation stage, when you are accepting the client or when you are continuing for the next year, the planned scope and timing of the audit, including the work to be performed across the group, should be communicated by the group auditor to group management. That is something that we usually do in the audit also. Planned timings, right? What nature of work would be done, what would be the timings, everything we share with the management. Similarly here, group auditor would be sharing it with the group management. Okay. Now, fraud should be communicated in a timely manner to group management. If there is any fraud that comes in the attention of the auditor, then that should be communicated to the group management. When? In the timely manner. When? In the timely manner. I hope this is clear. I hope this is clear. This is also similar to what we have discussed in the normal case of audit, right? Now, following information needs to be communicated by the group auditor to those charged with governance. See, this is for management. Okay, this is for those charged with governance. That is the difference between these points. Please do not miss it. Okay. Now, audit work at components and involvement of group auditor. That is, what work would be conducted at the component level, as in who would be doing it, what kind of auditor would be doing it, did they evaluate the objectivity of those auditors, every communication, along with if there would be any work that would be conducted by the group auditor also. That is, sometimes group auditor might decide that some part of the work would be done by the group auditor also. So group auditor has to communicate that also. With whom? Not with management, with those charged with governance. Why so? Because okay, those charged with governance of the group or the component, definitely the those charged with governance of the group, right? Now here, please try to understand this one thing, that in this case, those charged with governance, in this particular case of those charged with governance, you have to understand that whatever work you will be doing, you have to explain that also, whatever, not just the important ones, not just the significant work, not just the significant judgments, but everything you have to tell to the those charged with governance, because you are going to the group, right? Now, concerns about work of components, concerns about what? Work of component auditor and how to address that is, sometimes you might evaluate and you might find out that the component auditor maybe is not competent to perform that kind of audit. Say there is an auditor who does not have the sufficient knowledge of the relevant standards. Now you are thinking that whether that particular auditor is competent to perform this particular engagement or not. Whom you should share this concern to? Those charged with governance, right? Example, when group auditor, when group auditor evaluates that the component auditor is not competent or objective. I hope this is clear. Now, limitation on scope, if any. What is limitation of scope? We have already discussed it, limitation on scope, right? So if there is any limitation on scope, that is some document, some access, some procedure is not being facilitated by the management, that could generally be called as limitation of scope. So if there is any limitation of scope, you can communicate to the those charged with governance. Any fraud that leads to material misstatement in group financial statements, if there is any knowledge of fraud. So you discussed fraud in management also, those charged with governance also. So my dear friends, first of all, it should be communicated to everybody at least one level above. Then if there is any fraud that could have material misstatement, any fraud should be communicated to management. But frauds that have material misstatements over the financial statements, or that are supposed or that are expected to have material misstatement in the financial statements, that should be communicated to those charged with governance. Okay. Now, deficiencies in groups systems of internal control. In normal case also under ISA 265, we communicated to those charged with governance. So here also we will be communicating to those charged with governance. Has anything changed? Yes. What has changed? These 2 points have changed. These 2 points. Point 1, point 2. Point 1 talks about the involvement of component, and point 2 talks about the concerns regarding the work of the component. These 2 points are new. Okay. And these 3 points, just like normal audit, just like normal audit. I hope this is clear. I hope this is clear. Yes. Now documentation. Let's talk about the documentation part. What kind of documentation needs to be maintained? What kind of documentation needs to be maintained? So for a group audit, the documentation should also contain the following. That is in addition to the documents maintained in the regular audit, these documents are also mentioned. Okay, these documents are also maintained. What should be the level of documentation? Again same, the level of documentation should be the level of documentation what we have discussed in audit documentation standard. So the level of documentation should be enough to explain or to help understand an experienced auditor with no previous connection to this particular audit about the procedures that have been performed, the evidences that have been obtained, and the conclusions that have been drawn, and the relevant professional judgments that have been taken. So what all document needs to be taken care of? Any limitation on scope and how they were addressed. Again, group auditors determination of components for the purpose of planning and performing the audit. That is how group auditor selected the components to be included or considered. Okay, how they have selected it. Okay, then the determination of component performance materiality. The determination of components performance materiality, that is how materiality has been calculated and communicated to the, now communication is not mentioned over here, but that is also done. How materiality has been calculated and communicated to the component auditors. Okay, then evaluation of component auditors used, that is the objectivity, because it is the job of the group auditor to evaluate whether the component auditors are objective or not, right? So do what? Evaluation of component auditors used, that is the objectivity and competence of the component auditor. Okay, now details of group's system of internal control. See, system of internal control should be kept, and the details regarding that should be kept by the auditor, should be evaluated by the auditor, should be understood by the auditor. But for the group's system of internal control should be understood. DSR of component auditors work. What is DSR? DSR as in what? DSR design. Is it design? No. Direction. You know, we made this mistake once. Direction, supervision and review of what? Of component auditors work. That is how that work would be directed, how the instructions would be sent, how the work would be reviewed by the group auditor, and how the supervision would happen on a continuous basis, so that we do not lack on anything at the end. Now all communication with the component auditors, all communication needs to be maintained with the component auditor, so that it could be used as an evidence later on. This is very important pointer. Okay, now group auditors responses to the component auditors finding. Group auditors responses to the component auditors finding. Group auditors responses to the component auditors findings. That is, if component auditor has found certain thing which should be made part of the report, or they have made certain thing part of their report, then how the group auditors responses are. That is, whether group auditor also considers it misstatement and material to group FS or not. That is, some error has been identified at the component level. So whether that particular misstatement, whether that particular error is considered as material for the group auditor as well. Okay, now issues when a component is located abroad, that is foreign, that is, or example, not that is, because there could be other parts also. Example, foreign subsidiaries. Now my friends, imagine that you are staying in India and you have a subsidiary in a foreign. Okay, so say X Limited India controls Y Limited, this is in UK. Okay, now my friends, I am assuming that you have knowledge of these terms, control, significant influence, from your FR and SBR syllabus. Just in case you are confused, please feel free to reach out to me. Okay, now foreign subsidiaries, X Limited controls Y Limited. Okay, X Limited is located in India, Y Limited is located in UK. So what could be certain issues? Different accounting policies. Maybe their LIFO might be allowed, here LIFO is not allowed. Example, UK allows LIFO while India does not allow, right? That could happen. Changes in accounting policy. Cultural problems might be there. Problems might be there. Say, example, timing shifts might be different, so it might be very difficult. Issues specific to the country. Say, terminologies, the terminologies that we are using, say some terminologies might be appropriate in India, might not be appropriate in UK, and vice versa also, that might happen, right? So that could be there. Do you need to remember this? Definitely. This is very, very important question, and this might be asked. Although it looks like a very simple discussion, but this is very important for your examination. Now, correct classification of investments. We have already discussed about how the classification should happen. So control means subsidiary. That is, if you have a control, it means it is your subsidiary, and significant influence means associate. Although this is your FR or SBR knowledge. Okay, let me write it more specifically, not just FR, SBR. This might be running from your FA, FR or SBR knowledge. Okay, but let me just give you a brief about it. So control could be in the form of voting rights or control over the board of directors. Significant influence as in or more than 50% generally, yes. Whereas when we talk about significant influence, it is between 20 to 50%, both inclusive generally, right? So significant influence, associate, right? So that is very, very important. Okay, now procedures. If there is any changes, please deal it within your FR and SBR syllabus. Okay, now procedures. So how we can determine that who is in the control? So review board minutes. There you will find that who is actually taking the calls, who is actually being reported to, and discuss with directors of the parent that who is actually in charge. Okay, so procedures to evaluate who has the control or significant influence. I hope this is clear. Now I should make this C big. Okay, capital C. Okay, I hope this is clear. Let me write the full word again. Okay, I hope this is clear. Yes. Now, consolidation audit procedures. That is, what audit procedures are specific for your consolidation. Again, a little bulb that this should be already known by you, considering you have already studied FA, FR, SBR. Okay, so this is very, very important. Now, consolidation audit procedure. So calculation of goodwill is there, and any impairments to goodwill, any impairments to assets also. Cancellation of any intercompany balances, which is also called as what? Elimination. Remember, this is also called as elimination, right? Then provisions for unrealized profits, for what? For which kind of adjustments? For intra group sales, right? Or let me write it more specifically, for sales and purchases within the group, right? So A has sold to B, A has charged the margin, B has paid it, but the profit has been taken from one pocket and kept in another pocket of the group. So as a group, they have not generated any profits, right? So provisions for unrealized profit needs to be taken. Then fair value adjustments. Fair value adjustment needs to be done. What is fair value adjustments? So there could be fair value of investments also within the group, right? Then retranslation of financial statements from overseas components. Example, conversion of UK subsidiaries FS into INR, that could be there, right? Now correct classification and valuation of components in parents FS. Correct classification and valuation of components, that is whether it has been classified and calculated appropriately or not. That is, if it is a long term asset, whether it is classified in a long term, whether it is a short term, so it is classified in the short term, and what is the level of amount. Now implications for the auditor's report where a subsidiaries, the spelling is wrong over here, it's subsidiaries, okay, Y is missing, subsidiaries. Implications for the auditor's report where a subsidiaries report is modified. Implications for the auditor's report where a subsidiaries report is modified. That is, a subsidiaries, a component report is modified. So what would be the implication for the auditor's report? We have already discussed it, that it depends on the professional judgment of the auditor, the group auditor, professional judgment of the group auditor, that how this particular qualification, how this particular issue would be dealt in the group financial statements. Okay, so let's read it. Materiality for the group as a whole is determined by the group auditor. This we are already aware about. Therefore, impact of a modification to the component auditor's report on the consolidated opinion is a matter of judgment for the group auditor. That is whether a matter highlighted by the component, whether the matter highlighted by the component auditor is material or not to the group FS and group auditor's opinion depends on the professional judgment of the auditor. I hope this is clear. Now joint audits. Now with this, the group audit has come to an end. Now we are moving towards the last two topics. One is joint audits, another one is transnational audits. There is a separate standard for ISA 299 for joint audits, which is ISA 299, and then there is one topic which is transnational audits. Once we cover both of them, the entire chapter would be covered. So joint audits. Joint audits where more than two or where more than one auditor is involved. So audit where two or more auditors are responsible for an audit engagement and jointly produce an auditor's report to the client. This is called as joint audit. So say example, A and company and B and company together signs the audit report of A Limited. Now when it should happen or when it could happen, so it could happen when it is a new acquisition. So there could be the requirement of the old auditor as well as the new auditor. Maybe both the clients do not want to leave their auditors, so both might continue with the joint audit, right? There could be issues in location. So say there are 10 subsidiaries, each are located very widely from each other, very different from each other. So we might hire a local auditor also, right? And sometimes client might prefer the auditor who used to work earlier. So new acquisition could be the reason, client's presence in multiple locations and foreign subsidiaries. In case of foreign subsidiaries, maybe if I accept any client which has components in the foreign subsidiary, okay, in the foreign country, then I'll have to hire the local auditor over there, and I'll have to collaborate with them to submit the report of the component because they are competent to sign over there. So that might be the reason for joint audits. Now, necessary to consider the experience and standards of the other firm. Necessary to consider the experience of the other firm. By whom? By the joint auditors. That is, before signing any report or before accepting any agreement or before accepting any engagement as a joint auditor, you should evaluate that whether the other party is competent or not, what is the standard of report, what is the standard of quality of the other party, other auditor. Now, allocation of work would be decided via professional judgment between them, but who would be responsible? Everybody would be responsible. Everybody would be responsible. So, allocation of work. Now, this is important. Allocation of work. How allocation of work would happen? Between the firms needs to be agreed, and the auditor should agree whether joint or separate engagement letters will be issued. So, allocation of work as agreed between them, okay, and whether separate or whether joint or separate engagement letter would be issued, that is also decided between them. Both firms should sign. This is very important. Both firms should sign. That is, it should not happen that only one firm is signing the audit report. Both firms should sign the audit report, and both are responsible for the whole audit. So both firms should sign, both are responsible for the whole audit because they are jointly liable. However, there are certain considerations over it, like for specific areas agreed to be done by one, that one firm or auditor would be liable, okay. For common areas, all firms or auditors, when I say auditor, I mean the individual auditor, would be liable. And when I say for presentation and disclosure of affairs, that is, everybody has done their areas appropriately, everybody has conducted the audit appropriately, only the presentation and disclosure of the financial statements or audit report is not correct, then again all firms would be responsible. All firms would be responsible, as this is something that should be done by everybody together. I hope this is clear. Now, with this we have completed the discussion on joint audits as well. Now we can come to our last discussion, which is transnational audits, right? Now this is something very unique. Let me explain you this, then we will be going into the technical discussion, into reading the technical text, okay. Let's discuss about transnational audits first. See my friends, what happens is sometimes one country, one auditor is performing the audit. However, the audit report is to be relied upon by the different country also. For example, let's take the example of Reliance Industries Limited. Reliance Industries Limited attracts foreign investors also. So this audit report that we are signing in India would be relied upon by people from a foreign country also, right? So this would be called as transnational audits. Where report of one country, report generated by one country, one jurisdiction would be relied upon, would be evaluated by different jurisdictions from by people of different jurisdictions, okay. So that is very important. So audits where the FS may be relied in a different country to where the entity is based, that is other than, or let me write it full, that is relied upon by people based in location other than home location, okay. So this is generally country, not the state, the country, different country. Issues in transnational audits, similar same as, not even similar, same as issues in subsidiary or in foreign subsidiaries. Same as issues in foreign subsidiaries. Okay. So difference in audit approaches, like we discussed, cultural differences, issues specific to the country, that is common here. Now last thing for the whole chapter. See how important this must be, right? So IAASB, what is IASB? We have discussed it in chapter number 1, right? IAASB has set up transnational auditors committee, okay, to support and provide guidance to forum of firms. Okay, they have created one committee, TAC, to support and provide guidance to forum of firms, which is FOF. Specific responsibilities of TAC includes what? Identifying audit practice issues, that is, what are the issues that are being identified while the audit report is being relied upon by the different country. Maybe there might be different formats, different terminologies used, right? Example, different formats, terminologies, etc., right? Then discussing best practice, that is, maybe using the common terminologies, like we have seen a shift from the use of fixed assets to property, plant and equipment for the global recognition. Then identifying members to serve on committee. So that is very important, that who should be serving in the committee, this particular TAC only, committee as in TAC only. Okay. And then acts as a formal channel for interaction among firms. There are multiple firms, so this acts as a formal channel for communication between them. With this, we have completed our chapter number 11, which is group audit. I hope you have understood it. This chapter is generally considered as a little tough chapter, that kind of a chapter which the students are unable to summarize. So I hope you have got it. Okay. Now, if you want to have any discussions with me regarding this particular chapter, so you can come to my YouTube. You can come to my YouTube channel, or you can come to my Telegram channel. I'll also share these notes on my Telegram channel. Okay. You can also reach out to me on my Instagram page. All of these are available by the same name, which is ACCA with CA Supreet Agrawal. Okay, I hope this is clear. I hope this is understandable by you. Okay, and if you want to enroll in any of the courses that are provided by me, you can come to our website, which is www.bbvirtualsglobal.com. okay, and if you want to reach out to me, then you can reach out to me via the number given in the description. So I hope you have understood this chapter. All the very best. If you have any questions, please feel free to reach out to me. Thank you so much. And yes, at the end, you have to say one thing, which is got it for audit.